afternoon, everyone. Welcome to my trade recap on RWLK RWLK Robotics Limited. I took this trade on Friday the 24th, and also I traded this on the 21st when we had this big volume day here. And I actually cut myself short on quite a bit of profits, left a lot of profit on the table on that trade, but it was what it was at the time. I don't want to dive too deep into that. I'm really focusing on the Friday trade. But what I was surprised to see on the trade from Tuesday, the 21st, was the fact that we broke through this major moving average. This is a 200-day moving average. Right now, if you're unfamiliar, we are looking at a daily chart of RWLK. So each one of these candles represents a single day of trading action. So to see this thing move through 3 major moving averages in a day with this volume is just crazy for me and to see. So I was very surprised, and I kept it on my watch list all week. And really what I was looking for was a pattern to develop on the daily chart where this EMA 8 started to act as support, which it did, and push this thing up further on Friday the 24th. So we're in a very bullish momentum stage here, and I'm hoping that we can keep up this trend. As you can see, this purple line here represents the 50-day moving average, and all through these last few months, June, July, August, September, the 50-day moving average has acted as a resistance level for this stock. So breaking through that, gapping up on the 21st through that, and through the 100-day, which is the next support, next resistance level up for a moving average, and the 200-day was something to behold. So that was why I was really interested in the stock as we moved through the week. And I like I say, I only traded it twice this week, the 21st and the 24th. And so let's jump into some resistance and support levels so we can see what we're actually looking at here on the chart. On Friday, the 24th, what I was looking for was the 217, 220, 215 area to act as an area of support for this stock. I did not want to see it dip below. You know, we could have gone down to the 200, but that would have been a sign of weakness for me to see in terms of, you know, strength off the morning. And the reason being is if you're going to get a continuation move to the upside, you know, we're going to make a move like that, you want to see the previous day's higher close act as an area of support. So as you can see on the 22nd, this is where the stock opened. We closed down here. On the 23rd, we opened down here, closed up here. But we almost tried to retest that 260 level, but was pushed back down. And so that 220 level now becomes an area of interest for me for a support level. And we did get that off the morning bell, which you'll see in a second when I jump into my intraday chart. So that's what I was looking for in terms of support. So let's talk about resistance. $2.60 is the next obvious level, and that is the high of this candle. Why is that high of that candle an area of resistance? Well, if we look back in the history of this chart, if we look to the left, this area, this 260 area, was an area of support for the stock. It was an area of resistance prior to that. You know, we could probably even go further back and see that level come into play, which of course we do see here. So that was back in late 2020 or 2019 even, sorry, and January 2020 resistance, and then, you know, crack down below, and this thing's just been treading water ever since, just trying to get back up. And then we had this major run up in January, February of this year, and then this crash and pullback. So those are the levels, you know, for the immediate future that I'm looking at. The next level up would be $3, which is just that round number, which again was a support level, then turned into resistance. Just like these moves here, where you see this support level get pushed down and then probably on slightly higher volume, kind of hard to see because the volume here is so massive, but this was probably a higher volume day, pushed down below it, and then acted as a level of resistance, and then the EMA kind of helped keep this thing pushed down. When you do see a stock, here's a quick little lesson on EMAs, because they're such short-term momentum trend indicators. When you see a stock kind of just moving through an EMA and not staying above it or below it, that's typically a sign of low volume, where the stock's just kind of consolidating, figuring out which way it wants to go. Once it picks a direction, like we see here, where we got this major gap up, and now this EMA is going to act as a support level for us. And I think that's essentially what we're looking for moving forward. What I want to see moving into next week is either the 200-day to act as an area of support. So let's see what happens Monday, Tuesday, or, you know, we get a pullback. You know, this line will continue to rise and probably start to curl if things start to go bearish on us. But, you know, if we get a candle come back down to test this level and then bounce off it, maybe drop below it, that to me is a bearish indicator. So we're going to the downside of this EMA. If we take a look down here at the accumulation distribution of this stock, we're going to see that, you know, we're in a severe downtrend on this, and that seems to be, well, you know, if I was to interpret that, I would say, there are a lot of bag holders in this stock, obviously, from this sell-off down here, these major gap downs. Not sure what the news was back then, I don't recall. But if I was stuck in this and holding and just bag holding for almost a whole year, say 7 months, 2, 3, 4, 5, 6, 7, 7.5 months. If I saw this thing do this, I would probably want to start selling and getting the hell out of this thing just to kind of cut my losses. I'm not, potentially anticipating it getting back up to these levels in the near future. So just to see that, we've all got our baggies. I've got 1 or 2 myself, which are unfortunate, getting ready to cut those. But when I see stuff like this, those are times where you really do want to start to think about, at least getting rid of some of your baggie and lightening the load, getting that capital back into your account so that you can use that, allocate that for different trades. So that's what I think is kind of going on here. I'm not 100% sure that this is actually on solidified news, like anything big's going on with the company. It's a 44 million share float company, so it is a low float. So to see it rotate, its float multiple times on 319 million shares, that's crazy. That's just absolutely nuts. So obviously I kept this thing on my watch list through the week, and that's what I see. So that's what I'm looking for, in the near term, support and resistance levels. The next support level would be the 200-day moving average at, let's just call that $2 right there. Let's move that down to about there, $2. And then below that, we got our EMA, so $1.84. So if you're going to play this thing, keep an eye on these support resistance levels and the volume. So let's go ahead and jump into the intraday chart and take a look at what I saw in the pre-market. So I'm just going to turn on my pre-market data. And again, goes back to the support level of this $2.17 area, which is the previous day's close. Looking for that to act as an area of support on this thing in the pre-market and in the morning session, and we got that here. So we did get a nice little area of support. Let's just zoom in so it's a little easier to see. So we got the support we wanted. So to me, thinking about making a move on this, okay, that verifies that in the pre-market people are looking at this level. So great. So let's keep an eye on that as the morning bell rings and things get to start. So let's go ahead and turn off the pre-market data and talk about the indicators that I use intraday and why I turn off pre-market data. Really quickly, the reason I turn that off is because I want the aggregation periods of my 2 major trend indicators, my technical indicators of the EMA 8, which is this blue line here, my exponential moving 8-day average, and then the VWAP, which is this red line here. So I'm looking at those to aggregate at the morning bell. I don't care about pre-market volume. I don't care about pre-market data. That does not really affect the way I think about a stock because those levels can be breached and broken once the real volume starts to come into the stock. So really light volume is just very unreliable information. I want to see the real data start to accumulate after the bell. So never, for myself, I never trade the first 15 to 20 minutes of a stock. There is the rare occasion where I do, but typically 100% stay away from this. This is pure momentum, scalping time, profit taking time. So this is when traders are chasing, and I don't want to chase. I want to see data start to develop. I want to see a pattern start to develop, and that way I can make an estimated guess as to where I think the stock is going to go based on the information that I see. Disregard these dotted lines, these major moving averages on my intraday chart. They don't really mean much. I don't use them as levels. The reason that they're there is obviously because I switch between my intraday and my daily charts pretty quickly when I'm looking at 4 or 5 different stocks, 6 different stocks. So I want to be able to quickly use those levels on the daily chart, and I don't want to have to turn them on and off. So it is coincidental that it did bounce off that. That doesn't, for me, validate that this is an area of support, but it just so happened that 50-day does line up in front of the support level below at 217. So from that point, what I do next is I start to draw up my Fibonacci retracement levels, and I do that by drawing the beginning of this from the previous day's close up to the intraday high, so up to that 249 level. And I start to look and see, like obviously we fell well below the 61.8. That's, it is what it is, but so that's what I'm starting to see, and what I was really looking for at this point in time as the stock started to develop was this 38.2 Fibonacci level to come into play. As VWAP started to line up and the EMA started to line up, and we got this VWAP trade line cross where the EMA 8 crosses up and over the VWAP on a really nice 45-degree angle, and looking for a sharp increase in volume and share price to validate and confirm that we are in fact going to try and make a move to the upside. So that being said, I took my first entry at $2.30, or took my main entry at $2.38 rather, sorry. So this level is now my entry. Let's make that green so you guys can see that really easily. And I went ahead and got long on this red candle here. So let's just make this a little bigger. So this red candle is where I took my entry, and I was using this 217 area, 215 area, somewhere in that zone as my stop loss, which allowed me to position size myself correctly so that I'm going to ensure that I'm losing the amount of money I'm comfortable losing on this trade. So in this case, I was full size, which is exactly where I want to be on this stock. And, you know, we started to consolidate and eventually made this move up on this candle right here through VWAP on an increase in volume. So this is the first sign of an indication we're going in the right direction. We also put in a higher low from this low, and we actually started to develop down here this little wedge pattern. I'm going to draw that out so you guys can see that there. So ideally with this wedge pattern where you put in this higher low, you just don't want to see it breach this wedge and go back down to the downside. If you do, now we're looking for a double bottom gap up where, you know, this area down here where the low of the day is going to act as an area of support again, and we get a bounce back and a retest of VWAP. So there's two ways you could have played this. You could have gone ahead and gotten long down here on this candle. That's not the way I do it. You know, you got a really short ratio, risk reward ratio here, because you're going to want to take profits in front of VWAP because we don't know if that's going to act as an area of support resistance. So I like to confirmation to the upside and wait for that VWAP trade line cross to actually occur. I did get in I was a little antsy to get in, admittedly, and so that was my first mistake. I could have probably waited and been a little bit more patient, looking for the actual confirmation of the cross, which maybe could have gone on there, but we didn't. So, you know, whatever. I know where my stop loss is. I'm going to respect that stop loss, but I really did have conviction in the trade because we got that support off that 220 level. So that was giving me the confidence, to be quite honest. So let's just take a look at a couple of factors that line up on a technical indicator level. So let's just make this a little easier to see by zooming in. So the first thing I want you to notice here is this 38.2 Fibonacci level, how this lines up quite beautifully with the VWAP, which is this red line, and the EMA8, which is this blue line. So we got three technical indicators lining up on a very specific price area of $2.36. So right in that zone. So nothing's perfect in this, guys. So, you know, we want a zone. We're not looking for a specific price number, give or take a couple of cents up and down. So that is a really strong indication that things are going to start to move towards the upside. As we broke through the resistance from this level here, we started to just kind of consolidate above it. So that's this little zone here where we started to just kind of put in a little consolidation pattern. And then we started to make our move on volume right here as we started to get up and test the initial morning high, which is right there. So my recommendation is, and what we do in our trading group, guys, is we take profits before the initial morning high in front of that level, because that is an area of resistance. If you do not take profits here and the stock rejects at that level, you're going back down to the downside. So taking off in front of this level is essentially a risk mitigation strategy. You're removing risk off the table. It's not really a profit target, more as it is a risk reduction. And that's important because if we get that turn to the downside and this trade doesn't work out, you're limiting your losses. You're actually cutting your losses down by either 25% or in my case 50%. So in these market conditions where we haven't seen a lot of follow through on a lot of stocks, I tend to take a little bit more off my first profit target. Some people don't. Some people do the 25%. I do 50%, and that's what I did here. I went ahead and put a sell order out in front of this initial morning high at $2.48. So right there on that level, right on this candle here, and I got filled on some really nice volume. Like, look at this volume, beautiful, beautiful upside volume. So first 50% of the trade is taken off right there on that level. The next thing I did was, obviously we're seeing some nice follow through, to go ahead and set a sell order in front of the next resistance level, which is this $2.60 area. So I put an order in at $2.58, which is right here at this level, right in front of that resistance level. Went ahead and got filled on that. And really quickly, I'm just going to talk about why it's important to put your orders out ahead of time. You don't want to wait for a stock to get to your level and then put a sell order out with your sell button. You gotta have those orders out ahead of time so that they do get filled promptly and that you're not scrambling to get an order in And you can always cancel, if a stock, I've done this many times where a stock gets to a level and I'm 2 cents too high, I'll just move my order down and just adjust the order and edit it so that it's, 2 cents lower, so I can guarantee that I get that fill. But you got to be quick, and you don't want to hesitate and wait too long to make those adjustments. So that being said, as the stock starts to move up here, go ahead and start pulling up these Fibonacci levels, the new high of the day. We had this really nice extension. But here at the top of this level, at this 275 level, and this is where I think I made screwed up the rest of this trade, is we started to see some rejection. We get this this spinning top and some more rejection here. The rejection volume is strong, and the EMA starts to act as an area of support, but we were swiftly broken down below it on this candle, on this increase in volume. So that to me says we're kind of rejecting this area. We also had this flag start to form up here as well. So I'll just draw that out so you can see that a little bit more clearly. So that would have been your kind of bull flag. And really what you want to see is, consolidation in this flag, and then we get the break to the upside for some more continuation and an increase in volume. So you would want to see volume bars like this and like this to break out of this and stay out. So the key to the flag is, this is a failed flag, and the key to a failed flag is this rejection volume. Again, if we're moving to the upside and out of this, you don't want to see this come back up, test this level, and then fall right back into the flag. That is a sign of weakness. That could have happened. So, again, this is why you kind of always want to take profits in front of resistance levels. That would have been another area of profit take. I was really hoping we would get to 3, to be honest. And what I was ideally looking for was a consolidation above this 260 level here. So, maybe we get this move up, we get this pullback, and we consolidate and just bounce around this level, maybe dip below it, bounce around. And then in the afternoon, towards the end of the trading session, we get that explosive move to the upside. But that just didn't happen. Also want you to take notice of when this failed. Okay? It's 11:45, almost 12 o'clock, almost lunchtime. So trades tend to fail higher percentage of the time during the lunch hour, and that's just because there's less traders at their trading desk trading stocks. People are out getting lunch, walking away from their computers for an hour or two. So typically it's very hard for a stock to be strong in the morning, make this move, strong through lunch, and then strong again in the later power hour session. It's very, very difficult for a stock to maintain that all day long. I've in the last month or two, I've seen maybe 1 or 2 runners like that, where it's just had that all day explosive action. So we didn't get that. And as you can see, we started to pull back in, and this area did act as a support level for a little while, and then we breached it, and we're down to VWAP. Really what I should have done, and in hindsight, was take my last piece of profit off when we breached VWAP. That's the area I was looking to act as support, as my final line in the sand here. And I'm kicking myself for not doing it, but it is what it is now. I'm looking back and being retrospective about this trade. We breached it. This would have been a great area to just take my final piece of profit off the table, but instead what I did is I put my stop loss at my entry. At least considering that if it broke through my entry, I don't want to be red or take away the profits that I've already locked in on this trade. So I went ahead and put my stop loss down there, and it was triggered right here on this candle. Was banged out of this stock, unfortunately. And, I guess not unfortunately, because look what happened for the rest of the day. And this is what happens when you hope and hold, or hold and hope, rather. If you were like, oh, this 234, this is going to be our support level. I have a feeling about this level. It feels really good. And then this happens, and you're still holding. This is how you become a bag holder. And a bag holder on a Friday, you don't want to go into a weekend holding this. Look at that. That's just disgusting. And we had the volume to the downside to push this thing back down. $2 is going to be the next level of support. And if we go back to the daily chart on this bad boy, $2 happens to be exactly where this 200-day moving average is. So 200-day is going to be moving forward the level I'm going to be looking at on Monday, Tuesday. If maybe that holds, we can potentially take a look at trading this again. The final line in the sand from a daily chart perspective is this EMA. So I think probably by Monday we'll start to see it do this, and then we'll get a retest, possibly. So that's going to be, that $1.85 area. My feeling is if we get below 200, we're going to the downside. I feel like we're bearish on the CMF. So that being said, I guess what we're gonna have to do is keep this thing on watch through the week and moving into the Monday Tuesday session, and just see what happens. There's a lot of things coming into play on a macro level next week, which will affect markets, and those are from a macro perspective, those are things you always want to keep in your mind, even when you're trading small caps. And small caps tend to be less impacted by major market macro events. But that being said, anything can happen, and that's why we have to really honor our stop losses and make sure that we stick to our plan, we trade our plan. If we don't, we're going to wind up hurting ourselves mentally and in the bank. So keep the mental capital intact. That's so important. This game is 80% psychology, 20% pushing buttons. We can all push buttons. Can you control your emotions? That is the most important part of this game. Don't get comfortable with hanging on to stocks when they don't work out. If they don't work out, just cut your losses, move on to the next one. It only takes one good trade to make up for the bad trade. So keep that in mind moving into next week. If you struggled with this trade, or if you're bag holding this trade, I feel for you. Hopefully we'll get a bounce off that $2 level and continue to move to the upside. I like the daily pattern that we're forming. It looks good to me, and hopefully we'll get some continuation. But that being said, let's see what happens. And I hope you guys found this trade recap helpful. If you did, throw me a like, throw me a thumbs up, give me a follow, all that good stuff. And I've got some more trade reviews coming for you throughout the weekend and into next week. So thanks for sticking around on this, guys. Really appreciate you taking the time to check out my trade recap. Hopefully you learned something, and I will catch you guys on the next one.